The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Monday's trade action, we saw heavy pressure in bean oil, which pulled soybeans lower. A lot of that tied to a big drop in canola amid China's tariffs on Canada and their canola. Meantime, wheat trade double digits higher, good support there with the dollar continuing to be in a bit of a bearish trend. Corn largely caught in the middle, decent day in livestock. Heavy pressure in stocks. A lot for us to take a look at. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, it's good to catch up with you again. It's been a few weeks since we've been able to chat. Hope all is well. And quite a day on Monday, depending on what market you looked at, John.
Yeah, it's been a very interesting day in terms of some of the money flow, and obviously headlines actually quieted down a little bit compared to the last couple of weeks. So we'll have to see. USDA report tomorrow, so maybe a little bit of squaring up going into that report or position setting for those numbers tomorrow. So we'll kind of see what that is. Obviously, that's not the big focus of the month from the USDA. That'll be the prospective plantings numbers, grain stocks that come out at the end of the month. So tomorrow maybe just a little bit of a placeholder. I'm not expecting a whole lot of movement, maybe a few bushels here or there. But I think big adjustments will probably hold off for a while, and just until we see if anything is affected in terms of trade and exports because of the tariffs in. Today was China Tariff Day. They announced it last week. Those tariffs got implemented today. And on top of the tariffs that they announced for Canada, which obviously we'll have to see how they play out. Really not a factor in the corn market because they haven't bought any corn that we know of. And soybean side, most of them bean bushels are shipped. So yeah, a lot of different things kind of moving the markets today. And I truly think we're just getting ourselves a little bit ready for tomorrow.
I found it interesting, the big move, obviously, in canola with China's tariffs on Canada, 100% on their canola. Yet then that spilled over into soybean oil and drove us hard to the downside. Just interesting moves. To your point, I mean, the tariff headlines, it feels like these markets are largely just ebbing and flowing with these headlines as much as possible here, John.
Yeah, very much so. I mean, I was really, really tired of the word tariff on Friday last week. Just tired. It seems like it was an every other word type thing as we went through the whole week. But, there is a lot of ebb and flow. Why does a tariff on Canadian canola impact soybean oil? Well, it lowers canola prices for everybody. Even though China's not involved, they're got the markup there, but also that canola oil is cheaper to Japan. Well, soybean oil needs to compete, so it's cheaper to them. So that's why we see that big way over on the similar products. So it's going to be an interesting time as everybody's just kind of tariff happy right now and trying to get things out there. Every day we're going to see some type of news or a headline that could move these markets. So that brings the volatility up very much so. At least that was what's in the soybean market. Plus, we've also really seen some just interesting moves in the cash market as well in Brazil. When the tariff plan was announced, we saw Brazilian prices really take off. In fact, they're trading at some of the best premiums to the board that they had all year. In other words, Brazilian beans started to get expensive. I think that was some of the recovery we saw in the soybean market as well. Unfortunately, on Friday, that Brazilian cash market started rotating over, seeing probably some downside follow through today. And it's not coincidental. U.S. beans have moved a little lower. Now, staying in that bean conversation, because that gap narrowed, maybe because the time continues. Now, any beans that were on a boat and moving today was still not going to be tariffed by China, but they got to be imported by the 15th of April. Any purchases after today. So is up for tariff. So it's kind of interesting that we had a bean sale announcement, unknown destinations. Maybe China shifted. There was talk of some cancellations or washout in Brazilian beans, and they moved them. They must have moved them to the Pacific Northwest or the Gulf, to replace those beans because the gap between the two narrowed, and they could get the beans now because right now shipping out of Brazil has been a major issue as they were trying to work through this big pile of beans. So there's some things that were moving in the bean market today, but I do think those biggest factors, cost of Brazilian beans. We haven't even talked about the dollar real relationship. Those are all things that gave beans a little support. Now maybe we're seeing some of those pieces erode, and you saw that soybean market kind of tip over again today.
Well, and looking across the broader complex, obviously, I mentioned stocks, heavy pressure there on the day. Monday, tech stocks kind of leading the way. The dollar, you brought up the dollar real issue, and just looking at that global macro picture, it seems like for the most part, the ags were fairly insulated to some of those moves on Monday. But here again, another headline risk that these markets still have to play with and kind of abide by here, John.
Yeah, at least today they were shielded. But in the past here, the funds have been moving out of the ag positions. The last couple of weeks, we've seen strong selling across the ag complex, probably fear of tariffs and what was happening. Not just getting out of the long corn position, but, selling beans, selling wheat. They were selling cattle. They were selling hogs, selling cotton, getting into some of the softs. That we saw a major reduction in the fund length in general in the agri complex. Now maybe we're finding some stability in here now that we've kind of got past the big bold headline on tariffs. So we'll have to see what the trends are going forward. Commitment of traders this week. We did see that big sell-off in corn, but again, that's done on Tuesday, reported on Friday. So what happened Wednesday, Thursday, Friday, and this Tuesday? So it's very interesting to see where the money flow is going to be after we get through these next couple of weeks. Do they continue to bring that corn position down? Do they continue to grow a short bean position? Today's trade in beans looks that way. Do they continue to get out of some of that length, that shortness in wheat? Obviously, we haven't touched on wheat yet today, but really good day in the wheat market. Get the headlines there. First off, just concerns regarding dry weather in the Central Plains. Saw KC wheat get supported. And that global wheat picture is still very, very low. In fact, farmers' stockpiles, in other words, wheat stored in facilities in Russia, is at the lowest it's been in a long time. And so again, just showing you that there's just not a lot of wheat out there that's available to the free market world side of things. And some of those factors might come back into the wheat market, especially if we continue to see potential weather concerns for U.S. Southern Plains, Europe, and the Black Sea region.
Very true. I want to ask you about livestock, and then we're going to circle this all back to talk some risk management here today.
Sure.
A pretty decent day in cattle and hog futures, kind of a continuation of what we saw last week. It feels like we're trying to find some fundamental support in the protein complex. What's your thoughts over in cattle and hogs after Monday's session, John?
Yeah, Monday was kind of a poke it higher consolidation day. We really didn't get going on the live cattle side. We got a lot of questions regarding cash trade. We saw Southern trade actually steady, maybe a buck higher. Not a lot of movement in that Southern trade last week, but big jump in the Northern trade. Maybe that was tied to the U.S.-Canadian tariffs. Maybe that kept some cattle back, in terms of that didn't come across the border into those Northern slaughter plants. So they were willing to pay 200 plus for cattle. And that's what we saw Friday's big jump was the fact that we're getting 201, 202 type bids in Northern cattle. And the market obviously needed to find that premium that it needed there. So and we got some decent follow through today. Now we got to follow where the trend is here in that cattle market. I'm still very friendly to the fundamentals. Still like it going forward. Decent retail prices today again. So we're seeing a little bit of lift there. Not sure if that break to 190 in April was our short-term bottom. I'd be a little cautious if I got cattle on the hoof here in the next few weeks, just because first off, you got a stock market starting to wash out. That correlation between cattle and stocks is something that does still always worry me. We'll see if that comes into play. So obviously I think today was a put buying opportunity in cattle, especially if you got front end cattle here in April or June that you need to protect and make sure we keep some floor in. I wouldn't use fixed risk strategies here, or open-ended strategies such as a hedge, because of the fact that this market still could throw another $5-6 in it real quick and get back and challenge those recent highs. But at the same time, we're quickly $10 off of the most recent low, and that's probably a window we want to make sure we start trickling some floor back in, just in case this thing does decide to turn south here. Given the headline risk that's out there, given still the time of year. But just like I saw, we're supposed to be 70 degrees on Friday. Guess what I'm doing with my grill tonight? You never know how those things can quickly change based on some different weather patterns.
Very true. And maybe that seasonal grilling season, maybe it gets going a little sooner and maybe helps out some of that retail demand. Hard to say. Okay, so I want to bring this all encompassing here. So much volatility. There's a lot of things going on in the markets, John. So for final thoughts here today, I just love some risk management thoughts from you. What do producers need to keep in mind here as they're looking at their marketing, especially as we get ready to roll the planters here in very short order, John?
Yeah, touching grains in that regard. Then we come back and I mentioned pretty good thought plans and cattle and even hogs I would put in that same group. Let's make sure and building those puts underneath. You got just a lot of volatility in that market. Could turn really nice recovery in this hog market in the last week and a half here as well. But going back over to the risk management side and your question, like on the grains, on the corn side, there's some meat back on the bone after this sell-off, 450 December. I know it's not great, but guys can make that work. That's still an area I've been protecting basically since Christmas for new crop corn, is trying to get puts in around this 450 area, or you hit some sales and using hedge to arrives, things of that nature. Watch the carry game down the road. We already got 12 cents a carry from D's to March for new crop corn. Just already this market's anticipating a big acre number at the end of the month. If the weather's good, we're going to see that carry really push out. So I'm watching that very closely right now. If we get a big acre number in corn, I do want to be a bit of a buyer of some calls somewhere. Get that balance into your account. Reason why, we're already seeing dust bowls or, dust storm situations in the southern plains. Does that spread into the western corn belt? Hopefully not, but obviously we got to make ourselves prepared for it. Those 80-year drought cycles and things of nature that is out there in the news. This was the year 2025 that we were supposed to see those things. So we want to have good balance in your account, ownership over sales, put floors to protect your unpriced bushels, things of that nature. Beans get a little bit harder just because there's no meat on the bone right now. Even the insurance price for last month at 10.54 just doesn't incentivize a producer to want to plant extra beans. They're just kind of, if you're locking sales in just to protect yourself, I'm using short-term puts just to kind of watch for a washout because of this Brazil crop. I'm a little nervous about that here, but I want to be an owner of beans somewhere down the line because we get that demand window at the second half of the year when we're at harvest. That might be a spot. We want to have some calls on the books. We get some sales done off the combine. Papers already reowning, so that's something I'm going to be watching going forward. And lastly, the wheat market too. A lot of volatility in that wheat market. Options are expensive there, but at the same time, just look at a balanced portfolio around your bushels. I can give you 3 reasons why wheat's at $4, and I can give you 3 reasons why wheat should be back to 7. So again, that's going to be the biggest thing in this marketplace in my mind, is going to be a balanced portfolio, keeping yourself open for options in terms of things that can happen and what's in play for you in the marketplace.
John, great perspective as always. If folks want to reach out to you and have a conversation at Total Farm Marketing, how could they get in touch?
Sure. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours. A lot of great information out there at totalfarmmarketing.com.
Always appreciate it. John Heinberg, Total Farm Marketing, thanks for joining us, and we'll talk to you again next week.
Sounds good. You have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.